current price is sitting at $1.12 per share. The market is currently closed, with the last session ending on Friday, November 28th. We saw a closing dip of 0.0050 cents, or 0.44%, finishing the day flat, but tense. In the after-hours markets, however, we've seen a slight tick upward to $1.14, a 1.22% nudge that suggests the dust hasn't fully settled. But don't let that penny movement fool you. This is the calm before a potential storm. Here is the reality that most people are completely missing about this setup. The expectation right now is that Strive Inc., trading under the ticker ASST, is just another penny stock that had a massive pump and is now in its inevitable dump phase. Looking at the chart, you see a 52-week high of $13.40 and a current price of $1.12. The average retail investor looks at that chart, sees a 90% drop from the highs, and assumes the game is over. They think the bag holders are stuck and that the smart money has already left the building. But the reality is significantly more complex and frankly more explosive. What we are looking at isn't a standard pump and dump of a failing tech company. We are looking at a fundamental structural shift, a reverse merger that has effectively turned this ticker into a leveraged derivative of the Bitcoin market, modeled directly after the MicroStrategy playbook, but at a micro-cap entry point. The drop to $1.12 isn't necessarily a sign of business failure. It is the market pricing in the massive dilution risk from their recent $750 million capital raise, while simultaneously ignoring the potential parabolic upside if their Bitcoin treasury strategy executes correctly. The expectation is that this is a dead cat bounce candidate. The reality is that this is a coiled spring sitting on top of one of the highest short interest piles in the entire NASDAQ. Let's strip away the noise and look at what actually happened in the last few trading sessions. The consolidation we are seeing around the $1.12 mark is incredibly telling. When a stock falls from double digits to $1, you usually see panicked selling volume that drives it effectively to zero. We aren't seeing that. We are seeing a tightening, a compression of volatility where buyers are stepping in every time it dips below $1.10 and sellers are capping it at $1.20. This indicates a battleground. The volume on Friday was consistent, not chaotic. It suggests that the weak hands, the retail traders who bought at $10 thinking it would go to $100 overnight, have largely washed out. Who is left? Institutional capital willing to gamble on the Bitcoin thesis, and more importantly, the short sellers who are now trapped in a dangerous game of chicken. You have to understand the sheer magnitude of the volatility here. The 52-week range is $0.34 to $13.40. That is not normal market behavior. That is the heartbeat of a stock undergoing a total identity transplant. The recent price action has been dominated by the news of Strive Enterprises, co-founded by Vivek Ramaswamy, merging with asset entities. This isn't just a rebranding, it's a complete pivot. The market pushed the price to the moon on the initial hype and then crushed it back down when the details of the financing came out. The drop to $1.12 is largely driven by the mechanics of that financing. To buy Bitcoin, they needed cash. To get cash, they issued equity and warrants. The market fears dilution more than it loves the Bitcoin treasury right now. That's why we are down. But here is the contrarian angle. If Bitcoin makes another run to all-time highs, the assets on Strive's balance sheet appreciate, but the dilution fear remains static. At some point, the value of the Bitcoin they hold or plan to hold per share could disconnect from the suppressed stock price, causing a violent repricing to the upside. We are watching a stock that is trading almost purely on sentiment and macro correlation right now. Friday's flat close tells me that the market is waiting for a signal. That signal won't come from Strive's earnings report regarding their old business. It will come from the price of Bitcoin over the weekend and the behavior of the short sellers on Monday morning. If you're holding this stock or watching it, drop a comment below right now. Are you in this for the MicroStrategy 2.0 play? Or do you think the dilution is going to crush the price back to 50 cents? I want to know where your head is at because the sentiment on this is split 50-50. Now, let's look deeper into the short side of this trade, because this is where the immediate opportunity and danger lies. Short selling awareness and actionable insights. You cannot talk about ASST at $1.12 without addressing the elephant in the room: short interest. Current data indicates that the short interest on ASST is hovering around 38% of the float. Let that sink in. Nearly 40% of the available shares are currently sold short. This is an incredibly crowded trade. Short sellers have piled in, betting that the post-merger dilution will drive the price to its pre-merger levels of $0.30 or $0.40. They are betting that the hype is dead. But the 38% short interest creates a massive powder keg scenario. If positive news drops, say a regulatory filing showing they have successfully deployed that capital into Bitcoin without further dilution, or a tweet from a high-profile backer, those shorts have to cover. When shorts cover, they buy. When 38% of the float needs to be bought back in a hurry, you don't get a linear move up. You get a vertical line. Investors need to watch the borrow fee rate. This is the cost that short sellers pay to borrow the stock. On many brokerage platforms, the cost to borrow ASST has been spiking, sometimes exceeding 100% annualized. This is a tax on the bears. Every day the stock price doesn't drop, they are losing money just to keep the position open. If you see the stock price holding steady at $1.12 or $1.15 for another week, watch the borrow rate. If it stays high, a short squeeze becomes mathematically more probable as the bears rush to close out to stop the bleeding. Actionable step: do not simply buy because of high short interest. That is gambling. Instead, look for failure to deliver (FTD) data, which is updated semi-monthly. High FTDs suggest that naked shorting might be occurring or that liquidity is drying up. If you see FTDs spiking alongside a stabilizing price, it confirms that the sellers are exhausted. Also, be aware of the bull trap. Sometimes short sellers will cover slightly to let the price run to $1.30, inducing retail to buy, only to short it again from a higher level. This volatility is a playground for algorithm trading. If you are a long-term believer in the Strive thesis, you must ignore the intraday noise and focus on the weekly closes. If you are a trader, you need to be watching the level 2 data for large buy walls that indicate a whale is soaking up the selling pressure. The business transition: asset entities to Strive Inc. To understand why the stock is even at $1.12 and not $0.05, you have to understand the business model pivot. Previously, Asset Entities, the original ASST, was a company focused on digital community services, specifically Discord and TikTok marketing. It was a Gen Z-focused digital marketing firm. It was a real business, but it was small, niche, and arguably struggled to find massive scale in a crowded market. The new Strive Inc. is effectively a different company inhabiting the old ticker's skin. The merger with Strive Enterprises is an attempt to create a publicly traded vehicle for Bitcoin accumulation. This is often called the Bitcoin Treasury strategy. The logic is simple. If a company can borrow money or issue shares at a low cost of capital and use that money to buy Bitcoin, and if Bitcoin appreciates faster than the interest on the debt or the dilution of the shares, the share price should skyrocket. This is the exact strategy that Michael Saylor used to turn MicroStrategy into a boring software company into one of the most talked about stocks in the world. Strive is attempting to do this at a smaller cap, potentially offering higher leverage and higher risk. The $750 million you see in the headlines is the war chest. They are not raising that money to build better Discord bots. They are raising it to buy hard assets. The expectation investors have is that Strive will simply buy Bitcoin and sit on it. The reality is that they will likely engage in yield-generating strategies or structured finance to amplify those returns. This adds a layer of complexity and execution risk that the market is currently trying to price in. So where do we go from $1.12? The future of ASST is now inextricably linked to two things: the price of Bitcoin and the competence of the new management team in executing the capital raise without destroying shareholder value. Scenario A, the bull case. Bitcoin breaks its all-time highs and surges past $100,000. In this scenario, ASST becomes a high beta proxy for Bitcoin. Retail investors who feel they missed the move in BTC or MTSR look for cheaper alternatives. They find ASST at $1.12. The FOMO, fear of missing out, kicks in. Simultaneously, the shorts, remember that 38%, get squeezed. The price reclaims the $2 and $3 levels rapidly. If the company announces they have completed their Bitcoin purchasing, the uncertainty about dilution vanishes.